we're going to calculate that. That's all going to go into your total project cost. We need those numbers. Remember, every bank's got a little bit different box. So once we have the scenario together, they go out and find the right box, the right letter to match it with. I think this is the opportunity as a commercial mortgage advisor. I'm helping a lot of clients right now refinance debt, extend back out to a 10-year term, lower debt payment, increase cash flow, and that's what everybody's looking to do right now. I would highly recommend it. You got really nothing to lose, everything to gain, increase cash flow. So go to bookwithbo.com. Happy to sit down with you. My goal is to present your application in the most compelling way possible by addressing potential red flags upfront and highlighting your business's strength. We significantly improve approval odds. There you have it, entrepreneurs. Unlocking the door to SBA financing becomes much easier with the expertise of a commercial loan broker. They bring knowledge, tailored solutions, and increased approval rates to the table, empowering you to access the funding you need to propel your business. Remember, finding the right commercial loan broker is crucial. Look for experience, reputation, and track record of success.
Hey Bo, I'm wondering how I can determine the approval amount for purchasing a franchise startup. Currently, I have $45,000 in liquid funds and an additional $50,000 that I can convert by selling some stocks. Thank you, Raul.
So it depends. I mean, we have some banks that we work with. So our company, we work as advisors where we find the right bank, credit union, and bring the deal to. So depending on the deal, we will then source the bank or credit union. So on something like this, some banks say, hey, anything that's a startup, even if it's a franchise, we're going to be at 70%. Some of them will go to 90%. They all have different boxes. Some of them say we'll go to 90%, but we need 10% equity injection. We need 7 or 8 months of reserves in the bank. So when we factor that all in, that's where we figure out what bank will actually do this. So based on this, with low reserves, we're able to get deals done with very low reserves, because one bank we work with, for example, they'll build in the working capital and they'll use that as part of your reserves. So they don't say, hey, we need the equity injection of 10% plus 8 months of reserves. They'll look at it kind of combined. So really what they need is the equity injection. And they're going to pull out an SBSS, which is a credit scoring model for small businesses that the SBA uses. And assuming you score 165 or better on that, then it's very probable. So to determine then your total project costs, we're going to figure out what the franchise requirements are. So let's just say it's an HVAC company and their requirements on the FDD are to have 2 trucks, 1,000 square foot of office space. We're going to calculate that. That's all going to go into your total project cost. We need those numbers. A lot of people just look at they get the FDD and they say, oh, I need this much. Well, we have to break it down. We have to get invoices. You don't have to go buy the lease or sign the lease documents. We have to get copies of those leases. So assuming we get that all, that becomes the total project cost, then we calculate it. So essentially, if you have 10% equity injection plus a little bit of reserves and your credit's good and you have a good track record, typically we can get these deals done. They're usually looking for a franchise model that's got at least 20 units. If it doesn't have 20 units as a startup franchise model, then there's some other caveats. But anyway, that's how we figure out what you need. Remember, every bank's got a little bit different box. So once we have the scenario together, they go out and find the right box, the right letter to match it with. So that's how it works.
Hey, Bo, what is the most activity you're seeing in SBA lending right now?
Well, right now there's a lot of acquisitions, a lot of franchise startups, but what I'm seeing most recently is a lot of people are inquiring because their debt payments on their 7A variable rate loans have gone up to 11.5%, Wall Street Journal Prime plus 2.75, sometimes higher depending on the loan size. So there are options. Before, you had to get approval from the existing SBA lender. You don't need to anymore. Before, we had to get a letter saying they were turned down, the bank wouldn't offer a fixed rate option or a lower interest rate. So now we don't need that letter. So it's a pretty simple process. As long as the debt is eligible for a 7A refinance, we can refinance you into a fixed rate options with or without real estate. There's a couple different options. So if it's just a business acquisition, we know it's a 10-year term. And so if you're Wall Street Journal Prime plus a margin of 2, 2.5, or 2.75, we can do Wall Street Journal Prime plus 1 on a 5-year fixed. So maybe you've been in the loan for a couple of years. Now we can extend it out to a 10-year term and then drop your rate to a fixed rate for the first 5 years at Prime plus 1. Now, if you're saying, well, rates might come down a lot more, we also have a 90-day variable option, which would be Prime plus 1.25. So I think this is the opportunity as a commercial mortgage advisor. I'm helping a lot of clients right now refinance debt, extend back out to a 10-year term, lower debt payment, increase cash flow, and that's what everybody's looking to do right now. So if you're out there and you want a quick evaluation to see what options are available, you can go to bookwithbo.com. Simple process. I mean, you still have to fill out your documents, tax returns, personal financial statement, but the process can close within 30 days. It's going to take anywhere from 30 to 60 days, depending on how on top of the documents you are. But it's a great time. In addition to that, the guarantee fee is waived for loan amounts under $1 million right now. So there's savings. Typically there's no prepayment penalty on a 10-year term with SBA. So you should at least explore if you're paying prime, anything prime plus 2 to 2.75, or even prime plus 175, it might be advantageous for you to extend the term back out to 10 years, get a fixed rate option, or go into the 90-day adjustable option. I would highly recommend it. You got really nothing to lose, everything to gain, increase cash flow. So go to bookwithbo.com. Happy to sit down with you. I work with several banks that do fixed rate options. You can review it.
EquityInjection.com is the perfect solution for aspiring entrepreneurs who want to acquire a cash flowing business, but don't have the necessary capital requirements for the equity injection.